Technical analysis really sucks so bad at predicting price. And this may really surprise you because you're probably using technical analysis in such a way so as to speculate or predict what you think price is likely to do based on chart patterns, support resistance, trend lines, Fibonacci pullbacks, institutional order block, supply demand, liquidity sweep, market manipulation, Kobe stake, candlestick strategies. And it's so stupid because technical analysis really does suck so bad, like it's so bad at predicting price. However, I still use technical analysis, and I've been trading for almost a decade. I've made millions of dollars in Forex, crypto, stocks, everything, and I still use technical analysis. And you may wonder why. And here's the simple reason why. While technical analysis really sucks for speculation, technical analysis is an amazing, phenomenal, beautiful tool for controlling risk. And that is the only way that you will be profitable using technical analysis is using it as a risk structure, just essentially using it to structure risk. And I had a client in my group that just actually said this. He actually told me just yesterday. He said, it's my first week here at Mission FX, and I've learned a few things to help me take some steps forward. I've learned to detach my emotions from my trades, which is a big deal for me going forward. In the past, I was so invested in technical analysis and believing in it so much that I failed to see what was right in front of me on the chart the whole time, finding that just chilling out and letting things ride is the way. And I found so much more time on my hands and a better result. And it was a profitable week so far for his first week here in Mission FX. And it's not like I've been just saying this, right? I've been saying this for years in the free Telegram channel, which is actually where I posted this. It's a Telegram channel that has like 62,000 members right now. You can join it. It's the first link in the description. I send out my analysis every day. You'll see that all I use is support and resistance. It is so simple. It is so basic. It is so rudimentary. It is so like superficial, the amount of simplicity behind technical analysis that I use, because I just use it as a way to structure risk. And in this Telegram channel, I literally share it all on a daily basis, and I have for the past 7 years. Click the first link in the description. You can join it. It's free. If you think it's bullshit after you join it, you can just leave it in like 30 seconds. So when it comes to technical analysis, what I'm going to show you is why it really sucks for predicting price. Then I'm going to also show you how to use it in particular. If you literally can't take the time to watch this video, I don't expect you to be profitable trading. I've been trading for almost a decade. I'm uniquely qualified to tell you what I believe is the case. If this is too much for you and you think that's bullshit, you want to go try to learn how to predict price with some simple black and white strategy that relies on this and that, and you have to do the criteria, and then you think you're going to be profitable, then please go away. This video is not going to help you. If you're here to actually learn why things like technical analysis are useful and how you can use it to not predict where price is going to go, but to profit from whichever way price does in fact go, I'm going to teach you everything in this video. You don't have to pay me for shit. You can watch this video. You can join the free Telegram channel. 90% of the stuff I do is for free, and I just charge for a little subscription where people can have a group chat to ask me questions and follow my live trades every single day. So with that being said, let's get into it. Technical analysis. I took this trade on USD CAD, and I'm going to break it down for you as to why I took it. So here on the daily chart, we can see there's a couple areas that I think price has bounced at before, right? As support resistance. Here, it looked like it was as support. Price had kind of like dipped a little bit below it. Price had bounced up here, came back, broke below, found resistance here, and came down. So I thought, okay, on this higher time frame in the daily chart, I thought that price would be heading to the downside. And so since I thought price would head to the downside, you can see this one just came back and pinned me out at break even right now on the news. That's what stops are for. Since I thought price might go to the downside, what happened is it broke below the recent lows, went and found resistance, came back down, came right here and found support. And then at the support zone, it had broken below, came back up and retested at the point from which I ended up taking a sell. So I took a sell and I put a stop loss just above this area, right? Just above this region where the support zone was. And then if price would have gone up, I would have had a small loss. I would have lost money. It was like 8 pips away, and it was a 1% risk to the account. But if it did go into the profit target, at one point this trade was in like over $2,000 of profit, and the final target was about a $3,000 win, which would have been like 10 times the amount that I risked, right? The risk reward is 10.4 right here. So in this case, when I'm wrong, right? If I was wrong, right? In this case, it came back for a little bit of profit or break even or whatever. But if I was wrong, it would have only been a 1% risk. And instead, it came and pinned out as about a 1% gain or whatever it happened to be after fees and commissions. And so the way I've structured this trade is not to predict that it's going to go down any more than 50% of the time, because statistically speaking, you're not going to be right any more than half the time. However, I've structured it in such a way that if I do win, I make more when I'm right versus what I lose when I'm wrong. A lot of people who have been following my YouTube channel for a while, you might say, but Nick, you used 1-to-1 risk-reward ratios. Yes, but look at the way that I used them. The way that I would use 1-to-1 risk-reward ratios is I would set the stop loss at a place where it was unlikely to be hit. If it started going into profit, I would hold it to the profit target of a 1-to-1. But if it went against me, say, for example, it started ranging and going sideways, I would close at break even or small loss or small profit. If it broke above the support resistance zone, then came back to retest, I would close right there around break even, small profit, small loss. If it went against me halfway to the stop, then started ranging and going sideways, I would close halfway to the stop. And I would lose half of whatever the original stop loss was, which sometimes it would be anywhere from 1 to 5% of the account risk at the stop loss order. I would use it in such a way that I would make more on my winners versus what I lose on my losers. And that is the only way you will be profitable in trading, is setting things up in such a way where the conglomerate of your winning trades represents a higher amount of profit in terms of percentage and also monetary amount versus what you lose on your losers. If you simply make more when you win in the conglomerate, in the net basket of all the trades that you take throughout a year, versus what you lose on your losers, then you are profitable. And it is a very simple concept that almost nobody can do. Like over 90% of people fail at trading, and low single-digit percentages of people are able to actually make an income trading. Why? Because trading is risky, and most people lose money trading, and it's just a really stupid endeavor for most people to do because most people just don't take the time to do the problem solving required to learn what is necessary to actually get and stay profitable. I'm not here to sugarcoat it. I'm just here to tell you what I believe the facts are. I've coached thousands of people over the past nearly a decade. I know why so many people lose money, and one of the biggest deals is just because they're not making more when they're right versus what they lose when they're wrong. The interesting thing behind this is that you don't have to predict where price goes in order to make money. You just have to position yourself in such a way that if price does happen to go in the direction that you personally believe it will go, for whatever reason, support resistance, trend analysis, Fibonacci, if it does happen to go in the direction that it happens to go, then you just simply make money when that happens. But if it goes the opposite way, you just lose a little bit when you're wrong. If you just set things up that way, then you are profitable. Literally, like mathematically, statistically, in terms of probabilities, you are profitable. And I'm not making that up. Mathematically, that makes sense. If you make more on the conglomerate of the winners than the total of what you lose whenever you're wrong, then yes, statistically you're profitable. So with that being said, you can see this came, pinned me out. Now it's turning around, going back in the right direction. It is what it is. It was a small profit to the account, or it would have been a break even had this stop been closer, or it would have been just like a 1% loss. So when it comes to things like these, technical analysis is used as a way of saying, I will enter here and put my stop loss on the other side of the zone. And then if it goes to the stop loss, I will be wrong and lose a small amount. And if it goes into the profit target, then I will be right and I will make a small amount. I entered a trade yesterday on GBP AUD using this same analysis. And I will show you the trade right here. This one stopped out for a small loss. So I'll do the select bar and the replay trading thing. Let's see. Okay. I'm trying to hit the select bar right here. Okay. So this was the trade that I took. Price had broken below the support resistance zone, and then it came up and then it found resistance here at the zone. So what I did is I looked at this chart on the daily. I saw that it was bouncing in this daily zone. I thought it might come down here to this next daily zone, and I personally still think that's probably what's likely to happen. But in any case, who the hell can say, right? Because if you think something's likely to happen, unless you have a lot of experience and intuition and discretion and price action discernment, you're unlikely to be right any more than half the time. Cool part is with using technical analysis, you don't have to be right more than half the time. You can be right radically less than half the time and still make shit tons of money because of the way that you structure your trades. Here, I'll show you how to structure it. So if price were to go down and that outcome were to play out, then I would be right about the trade, right? So it's like if it came down here to these previous lows around where my original profit target was, I would be right. And put that purple line in there just to show you where my original profit target was. This was all called live in the MFX Nicks Trades group yesterday. As a matter of fact, I have the GBP AUD trade here somewhere. Oh yeah, I'm sure it was just this last one. So this was actually how the trade was structured. So you can see that's where my take profit was. The risk was 1% of the account. Entry was there at the zone, and the take profit order was down here, right? So $2,300. If it won, that's about like a 1 to 7 risk, I think 1 to 6, 1 to 7 risk reward ratio, whatever. So I structured the trade this way. And then how did I structure the risk? I use the idea of support resistance to structure the risk. Again, not to predict where price would go, because you can, but I used it to structure the risk, right? I used support or resistance as a way to say, price is up here at this zone. Now I can enter a sell. And then if it does go up above the zone, my stop loss was just above these highs.
and that's a 1% risk. And however, if I'm wrong about this, right, my intro is actually further up here. And if I'm wrong about this, then if it goes down, I'll make some money, on the profitable trade. But if I'm wrong about this, it will go up to the stop loss order and stop me out. And then I'll lose a small amount versus what I make, if it's a big amount and I'm right. Now, previously in the past, I would structure the trades like this with a 1-to-1 risk reward ratio. I'd have the stop somewhere just way above where it was unlikely to be hit. And then what I would do is I'd risk a little bit more, like 5%, right? Like 5 to 10% of the account. I would never put all my money into one trading account, but I would just use a small percentage of my trading capital in an account, and then I just risk higher amounts per trade. You can't do that with all your trading capital. For all your trading capital, I think a good risk per trade is anywhere from 0.5% to 1% per trade, or perhaps even lower if you're trading with a significant amount of capital, like millions of dollars. I think it's better to structure trades with like a 0.1% risk or like a 0.25% risk, just because on losing streaks, it doesn't wipe out a bunch of capital. And on winning streaks, you make a couple of percent on capital, which is amazing. Get to the end of the year, you have a really good year. So instead of structuring the trades like this, what I've just been doing now with all the volatility and not being able to like have price go against me like this and then wait for it to come back. And then if it comes back, I'll close it, break even there, and perhaps even flip into buys. And then if it bounced there, then I'll be right. And I would have broken even on the first one, but now, I've made profit on the second one. Instead of doing that, I've found that with the volatility since Trump got elected over the past like 5-6 months, it's just been so crazy that oftentimes when price starts running off in one direction, it has not been ranging or pulling back or stopping. And so I've just found it's just easier to just close the trade at a small loss if it does start going against me. And then if it does go into profit, then I just make a little bit more when I'm right versus what I lose when I'm wrong. That's what's been working well in the current market conditions. You do have to adapt to current market conditions, and the market conditions will always be changing. It'll never be the exact thing that it's been, 10 years ago, 5 years ago, 20 years ago, 30 years ago. You have to ensure that you are just slightly adapting things, modifying things, and auditing your trading approach in such a way that accounts for the current context, accounts for the circumstances, and accounts for the volatility of the market environment in whatever asset category you're trading. In Forex, for example, shit has been flying around everywhere. So that's how I've been structuring it, and it's been working fine. Like structuring it where you're losing small but making more on the winners whenever they work out. So in this case, what happened? It ended up spiking above the zone. I took a small loss. Then now it's finding support at the zone. It bounced a little bit last night, but now we're coming in here. And again, like I said, I still think this is going to go down. However, there's no way to structure the risk, right? There's this little downtrend. There's all these little highs going down that are all lower. We dipped below the zone, this and that. The proper way to structure risk is to sell at a resistance zone with a stop just past it and then have a target somewhere further, or buy at a support zone with a stop loss just below it and have your profit target somewhere higher. For example, let's say that I've been watching this in the middle of the night last night at like 2 a.m. like a psychopath, right? Just I'm awake at 2 a.m., whatever. This is like late at night as I'm trading, which I'm not. But let's just say that I was, right? And then I said, okay, it's at a resistance zone. And then it dropped. Let me sell here with a stop either right above this resistance zone or right above the recent high, which highs still function as support resistance zones, right? Like say you draw the resistance zone like that, and that's where you drew it off of or whatever. You put your stop just above one of the recent highs of the resistance zone and the same target, right? Somewhere lower, you still think the daily idea is going to play out. And so what happens is you end up using support resistance as just a way of structuring risk and then not really giving a shit whether it goes up or down. Because in this case, if you sell and it goes up, you lose a tiny amount, right? 1%, 2%, whatever it was you risk per trade. But if it does go into profit, you make a shit ton more. Counting fees, counting commissions, counting the spread, counting swap fees at the session changeover, no matter how long you have to hold the trade, whether it's a few hours, whether it's a few days, whether it's a week or two. If you're wrong, you're going to be wrong very quickly, even if you're using daily charts and putting your stops just on the other side of support resistance zones. But when you're right, because you will be right statistically, even just by random chance and the random distribution of your winners and losses, of your wins and losses, when you are right at some point, and it's not if, it's a matter of when you are right, that will start going into shit tons more profit. You will make 5, 10, 15, 20 times more on your winners versus what you lose on your losers. And that is the idea that keeps you profitable, is making more when you're right versus what you lose when you're wrong. The only way you can do that is by structuring risk. If you're not structuring your risk and figuring out what the hell you're going to do whenever the trade starts going into drawdown against you, if you just hold the trade and then just lose all your trading capital on one trade, that's a stupid, dumbass thing to do. You can get around this by just using a small percentage of your trading capital in one account. Then feel free to risk that whole account per trade if you want. That's perfectly fine. There's nothing wrong with that because it's still a small percentage of your total trading capital. It's just you've basketed that small amount into an account. Nothing wrong with that at all, but you don't want to be risking your entire trading capital on a trade. If you don't use a stop loss, if you're not using a hedge order, if you're not having a risk structure with you pre-planned what the risk is for each trade, even if it's the whole account and a small percentage of your trading capital. If you're not structuring risk in some way, like any way you want, all the little creative ways you have to structure risk, if you're not doing that, you will eventually have a trade that keeps going against you and blows your account or loses all your trading capital. You don't want that. It's a stupid, dumbass thing to do. There's no reason to do that. Whenever you get into a trade and it starts going against you, the simplest way to control risk is just to close it at a loss. And you can do that automatically with a stop loss order whenever you're Forex trading. And so in terms of this is a way you can structure risk using support resistance. You find a support resistance zone you think price will bounce at. Then you simply enter a buy or a sell at that support resistance zone. If it goes against you, then you lose money. And if it goes into profit, then you make money. Let's do a little replay thing here on TradingView, right? Let's go back to like a random bar and I'll show you the concept. So where is this at? This is May of 2007. I don't know if they'll have 1 minute chart data back then. They don't have 1 minute chart data. Let me go back to another random bar and hopefully we'll get, this is 2009. Okay. This is not taking us. Let's try to, I need to find something the past couple years because it's not 2012. Okay. Let's see. We'll find one here in a second. It's going to keep going forward. Let's see. March of 2014, 1 minute chart data. You know, we probably don't even need 1 minute chart data. It doesn't even have 1 hour chart data. Let's go ahead and exit this and then we will try again. I'll hit replay and I'll just go back to, I'll select a bar. Where is this? 2023, we'll go back a little bit more, 2021. Okay, we should have 1 minute data for this. We got 1 hour data and we've got, boom, we got 1 minute data. So let me show you exactly how to structure risk. We're here on the daily chart. You can see right now price looks like it's at a resistance zone where it's bounced a couple times. Now, some people would say price is in an uptrend and it's going to break past this zone. And I would say, fine, fair enough. You think it's going to break past the zone. How do you structure the risk, though? If you buy right here at the resistance zone, where are you going to put your stop loss, right? You'd have to put your stop to be reasonable all the way on the other side of these lows just to be safe, or at least these recent lows right there just to be safe, because it could still pull back and not make a new low and then go up and still be valid. And if you're targeting the previous high or even higher, you're barely getting a 1-to-1 risk-reward ratio, right? If you use the idea of support resistance, let's say you think that's the support zone right there, and then this little wick past it, that was just an anomaly, right? Price was just coming past it. Price is not perfect. Sometimes it'll snap past zones. But let's say this general region down here you think is the support resistance zone. Well, what you can do is you can just set a little TradingView alert right there, right? You click this little plus button on the side. Well, TradingView, it's not going to allow me to do alerts, but it'll put this line here. We'll just say that's the alert. So you put your alert wherever you want at the support resistance zone. And then let's say price comes down there and starts to bounce. You can buy right there, put your stop just under the zone, and then just have your target somewhere higher, right? And if you're using a 1-to-1 risk-reward ratio, then all you do is if it starts going against you, you just get out of the trade, right? You try to get out of it at a smaller loss than the 1-to-1 risk-reward ratio. But if it starts going into profit, you hold it all the way to the 1-to-1 risk-reward ratio. This just means you'll make more when you're right versus what you lose when you're wrong, even if you're only right half the time. And you can actually be right less than half the time and still make tons of money. A lot of people, it's way too painful. They'll watch loss after loss and they just can't fucking do it, and they shouldn't be trading. If this is you, I get it. It's a human emotion. But if you're taking loss after loss after loss and it's all small controlled losses for the sake of like waiting for when you do get a win that starts going into like 5, 10, 15, 20 times the profit, if you get pissed off that you're losing multiple trades in a row to the point you want to break your computer and just walk away and it just pisses you off, you just shouldn't be trading. And that's just a cold hard fact. You shouldn't be watching my YouTube videos. You shouldn't be trading until you get the level of fucking emotional regulation and self-control that is required to make trading decisions in a calm, logical, rational, present-minded way to where you're not losing your mind whenever you're taking consecutive losses. Consecutive losses are going to happen. That's a statistical probability. It is not an anomaly. There will be all the time if you're using risk rewards like this where you're losing 5, 10 trades in a row or more. It is 100% normal. And yet whenever you get a win streak and you win multiple trades in a row and you make shit tons of money, oh, for some reason you're not upset about that. Price happened to go that way and you win multiple trades in a row and you're happy, but you lose multiple trades in a row, you're upset. You really shouldn't be trading if you can't control your emotions in that way. You can develop that with time and exposure, but you have to have the mindset where you're like aware that that's going to happen and where you accept that that's going to happen. If you can't do that, you should find a different business model than trading, because trading is certainly not for you. You'd be better off buying the S&P 500 and just holding it for the rest of your life than trying to do something like trading Forex. So with this being said, you could structure the risk there by waiting for price to get to the support if you think it's going to go up. Now, let's say you just want to keep it simple. And you're saying, look, it's at a resistance zone. Maybe it'll bounce here. Let me sell. You perfectly recognize it could go up and lose, but there's also the chance that it could go down and work out. So we structure the time frame on the daily chart. And now we can go here to the 1 hour or the 1 minute, and you can structure the trade from here. So let's say we enter a trade there and we put our stop right above the recent high. And then we put our profit target somewhere down there. I'm just choosing the recent low right there that we can find here on the 1 hour / daily. Honestly, the next daily zone could be even lower than that. But let's just say we find a trade here. Let's say that we're trading on, I'll keep it simple, like an account of like $10,000, right? So we'll risk $100 on this trade. Let's do the position size lower. So we'll enter a sell right here, and then what we'll do is we'll drag the stop loss just above this high right here. So we're risking $100 on this trade, and then we'll drag the profit target down to there. And most of these, they're either going to result in a stop loss or they're going to result in a break even. Like they'll go into profit, you move the stop to break even, then it comes back and throws you out. All that matters is protecting capital. All that matters is the fact that you protect yourself when you have a losing streak with small losses or break evens. Then whenever you do have a win streak, support resistance allows you to structure that risk in such a way that you can profit from that win streak without having lost all your trading capital in the beginning. That's why it's important to risk a small amount per trade. So this stops out. It was a small loss. It was 1% of the account, $100 on a 10K account, and it goes above the zone. So then you go to the daily chart, and then you wait for the next area that price could go to that you think it might bounce at. So in this case, up here at this resistance zone, what I'm going to do is I'm going to play it forward, because what could happen is two things could happen. Number one, it could go to the resistance zone, and then we could just sell. Or it could come all the way back to the support zone, and then it could bounce as support, and we could buy. So you can see price gets into the support zone. I'm going to wait to see if it gets a little bit deeper into it, because it's hard to structure the risk if price barely comes into the zone. So in this case, it's one that just, it didn't work out. It didn't come deep enough into the zone, in my very subjective opinion. But now it gets up here to this resistance zone. So we're here at the daily resistance zone. Now I'm on the 1 minute chart. And then it starts to, made a high, came down, made some new lows, pushed up, and then now it's kind of struggling and looks like it might go down. Let me show you what happens when you structure the risk on these time frames. So in this case, it would take 5 standard lots with a stop just above the recent highs on the 1 minute here at the daily zone to structure the risk. The target's going to be somewhere way lower. We're not even going to be bothering setting a profit target yet unless it starts going into profit. Then we'll decide on a profit target after it starts going into profit and after we can move the stop loss to break even. Most of them will stop out. Most of them will be break even. Most of them will do that shit. But every now and then you get a huge winner that starts working out. We'll go to the 1 hour just to speed things up. Again, this is probably going to stop out. I'll click forward very slowly here using the little click thing. So this starts going into profit. So now we have to ask ourselves, where's a good profit target? In this case, I'm just going to choose to put that recent low as the profit target, just because price could bounce there. Now you'll notice we risked $100 on this trade. Now the current potential profit target is $800. And what we'll do, since it's gone into a 1-to-4 risk reward ratio so far, we'll just move the stop to break even. Maybe a little bit of profit to cover the commissions or something, but something to protect the risk. Again, you have to remind yourself, almost every damn trade is going to either be a stop loss for a tiny loss or a break even, and that's okay. If you can't handle that, you really shouldn't be trading. This is just the case with trading. I'm serious. Like I'm not just playing with you or being hyperbole or paying lip service to this idea that if you're upset about multiple losses in a row, you shouldn't be trading. I'm literally just trying to protect you and your own trading capital for your own good, giving you some very helpful, what I believe to be non-financial advice, saying you shouldn't be trading if you don't have the emotional regulation to handle losing multiple trades in a row and breaking even. As long as you didn't take a big loss, that's all that matters. So if you're losing, or if you're losing small on each trade, or you're having a break even, it's fine. It allows you to position yourself so that when you do win, not if you win, but when you do eventually win, you make more money versus what you lose whenever you're wrong. So we've structured a trade right here using support resistance, right? We entered a sell at this resistance zone. If price broke above one of the recent highs, we had to stop just above the recent highs. Highs and lows function as support resistance because you just put your stops past them. And this trade starts going into profit. So we move the stop to break even. It's probably going to come back and hit break even, but every now and then it'll go into more profit and we'll win a trade. You see it comes back for break even, hits us out at break even, and that's what happens most of the time. 45% of the trades, in my opinion, are going to lose. The other 45% of them are going to go into profit. You move the stop to break even, they come back and they hit the break even stop or the stop and profit. That's 90% of trades are either a break even or a stop loss. 5 to 10% of them are going to run into a shit ton of profit, and it will always make more versus what you lose when you're wrong. So price comes up here to this resistance zone again. Let's see what happens. It pushes deeper into the resistance. Starts to bounce. So let's go here to the 1 minute. So it came deep into the resistance zone, made a new low, lower high, lower low, lower high. So let's sell right here again. We'll put our stop above that recent high right there, just in case it breaks. We'll be able to get out of this trade, and we'll do another like 0.5 lots. So we'll see if this starts going into profit. If it starts going into significant profit, we'll just move the stop to break even. And after this, I might be entering some trades right now on GU and EJ, if that happens, if it sets up. So let's first see if this, so this starts going, it's in like a 1 to 2 risk reward right now. So I'll just move the stop to break even right there. We'll go back out to the 1 hour and we'll click forward to see what happens. Probably come back and just hit break even. So that comes back and hits break even. Again, you can see we've actually been stopped out in profit, but after fees and commissions, we're probably still down just 1%, right? So we lose 1% here, we lose 1% there. You can see that stopped out there. I'd clicked forward on the 1 hour chart way too quickly. So ideally, you would have entered another trade somewhere here in this zone, right? So like as it started going down. Let's just say you were asleep or for whatever reason you couldn't enter as it started breaking the lows and pulling back. Enter with the tight stop. Let's use the idea of support resistance here on this time frame and just say, okay, and now it's pulled back. The recent zone was right here. The stop loss goes just above. We add to it until it's about $100 risk. So that's about $100 risk right there. So about 1% of the account. If it starts going into profit, we'll protect the position once it's a significant profit. So again, it starts going into profit. In this case, about a 1 to 2 risk reward ratio. It'll probably come back and hit the break even, but again, every now and then when you win, it's a lot of profit. So I'll go to the 1 hour just to speed it up so you can see. Most people cannot handle this, right? And again, we've lost one trade and the other 3 have been break even. We haven't lost money, right? So we've protected capital this whole time. And we've also had multiple trades go into 1 to 3, 1 to 4, 1 to 5 risk reward ratio profits that could have been closed in profit, but they weren't because the idea is to hold it for radically longer. Just, in case you're right and it does start taking off. That hit the stop and then it started going down. So we're still participating in the same daily trading idea, but we're just waiting for an entry on the lower time frames. So this idea ends up playing out. We've got a support zone here. So let's see if it can break through the support zone. And if it breaks through the support zone and comes back to retest, we'll have a way to structure the risk. So it breaks. Now it's coming back. So now what we'll do is we'll look on the 1 minute chart. Again, we're not using the support resistance zone to try to predict where price is going to go. We're just using this support resistance zone as a way to structure the risk, right? A way of saying, okay, price is here. Now we can enter here when it's at the zone and we can put our stop just above the zone. And then if it does start going into profit, we'll make more. And if it goes into loss, we'll lose a tiny amount. So let's enter a sell here. Let's put our stop just above this zone. We'll have to add here. So this will be about, I guess, 1 standard lot. $100 of risk. Came real close to the stop, ends up going down. Let's see if it goes into more profit, then we'll move the stop to break even. So it stops out, it goes up. We'll go back to the 1 hour chart. So now we've had 5 consecutive trades in a row that did not result in a profit. 2 of them have been stop outs for 1%. The other 3 have been like small profit or break evens. So it comes back in here to the resistance zone, and then it starts to look like it's going to trickle down. Okay, fair enough. We're on the 1 minute. It went up to the high, came down, started to fizzle out. Let's sell here, and we're going to put our stop above the recent highs. Again, we're using the idea of support resistance to structure the risks, to say we're going to sell here, and if it breaks above these little recent highs, then we'll lose the trade, we'll take a small loss. And if it starts going into profit, and then it goes into enough profit, we'll move the stop to break even, and then if it comes back, we'll just break even on it, and it's no big deal. And this will probably stop out, but even if it does, I'll still be looking for a sell, because we're here at this daily resistance zone. So this starts, so it's at a 1-to-1. Let's wait for it to go into a little more profit before getting the stop to break even. Again, it's probably just going to come back and stop out or hit break even stop. The 1 hour chart will play this forward quicker. I'll move the stop to break even here because we went into like a 1-to-5 profit. So this came back and then it hit break even. So now we've had 6 trades, 4 break evens and 2 losses. The account is down $100 with commissions and everything, probably maybe like $200, right? Because these were small position sizes. This is a 0.1 standard lot. So the commissions are like very, very tiny. Even if you're using something like, I use forex.com. Forex.com, the commissions are, like a lot more than most brokers. But at one point, this was in $500, right? Just in the interest of time, and also because I've got some current trades right here that I need to take on Euro JPY and also GBP USD. In the interest of time, I'll stop the back test here. But you can see, like, just say, for example, after all this bullshit, you saw this trade sitting in like a $500 profit on this last trade, which is it went to a 1-to-5. We had sold it, went all the way down there. Right, that was a $500 profit. Let's just say you got fed up with it, you just closed there, right? That's a $500 profit. And then you've only offset it with about maybe $200 in total losses with fees and commissions. Now you're sitting in a $300 profit in the account, or 3%. And you've only won 1 trade out of the previous 7 total trades, counting that one. You've only won 1 trade out of 7. That's an incredibly low bullshit win rate, right? Because a break even or a small loss is not a profit. If you're only profitable on 1 out of 7 trades, it's a very small win rate percentage-wise. However, you still would have made 3% on the account. And if you're risking 2% per trade, you would have made 6% on the account. You keep doing the math as you keep structuring the risk and adding up the percentages. You can make or lose whatever it is you're comfortable with in terms of risk tolerance. But we've just used support resistance to control risk, and we haven't used it to try to predict price. And eventually, again, we've only done like 6 or 7 trades here. Eventually, you will get that trade that runs not just to a 1-to-5, not just to a 1-to-10, not just to a 1-to-15, but like a 1-to-20 or 1-to-30 or some stupid shit like that, where you make like 15, 20, 25, 30% in a trade. Most people can't do it. Most people won't do it because they won't just fucking hold the trade, right? They're going to close it in profit because they're scared. They're going to chicken out. It's going to come back. I had one client this week, what's his name? His name is Mark. He actually follows me here on my YouTube channel. He'll probably leave a comment because he watches all my YouTube videos, and he'll say like, "Oh yeah, I'm the one that Nick's talking about in the video at this timestamp, whatever the timestamp happens to be." He learned to stop chickening out because he closed this trade, the trade we were in USD CAD, whenever it was in profit. He made a big profit on that trade, sure. However, he could have made more had it come to the final like profit target. Now for me, instead it came back up, and you just saw at the beginning of this video, USD CAD came back up, threw me out in some small profit, right? About 1%, maybe a little under 1% gain. And that's perfectly fine because that's what happens almost every single time. But every now and then I get a trade that goes into a 1-to-10, 1-to-15, 1-to-20, 1-to-30 profit. And that brings back all the little break evens, all the losses, all the swaps, all the fees, all the commissions, all the stuff from the spread. It brings back all of that with shit tons of profit. And this is the whole point of it. When you chicken out of trades, like Mark said, and again, bless his heart, he's still learning, right? We've all been there. It took me years to learn this shit. Whenever you chicken out of trades that are still going into profit and working out, and you close them earlier, even though it feels like the right thing to do, it's just close it in profit. Statistically long term, when you're speaking logically and rationally, looking at the evidence and the statistical data, you will actually not make as much money, and you will in fact probably just lose money or break even if you're not holding winning trades more, so that way you can make more in your winners versus what you lose in your losers. This is a statistical probability of trade, or this is a statistical probability of trading. It is not an anomaly. It is not an irregularity. It is not something that's way out in left field as an outlier. It is something that is guaranteed that if you make more in the conglomerate of your winners versus what you lose in your losers, you will be profitable statistically long term. Most people can't do it. Most people won't do it. Don't be most people. So with this being said, what I will do now is I will exit this replay mode. You can go do all this shit for yourself on the replay mode. You can test it all out and you can see. So removing all these drawings. Okay, so all right, GBP is doing the one. Okay, so let me see where it's at because I got the alert triggered here. Yeah, so as I was making this video, it's already started to bounce. So there's nothing I can really do here. So that's GBP USD. So another one was on Euro JPY. So Euro JPY is at this resistance zone. Okay, perfect example. So this is a trade that I'm going to enter right now, and I'm going to actually call it out right now. So Euro JPY is pushing deep into this resistance zone. Now, what's going to happen? There's going to be one of two things happen. The first thing that could happen, which probably will happen, I say probably meaning like as a way of just mentally having no expectations. You don't really know what the hell will happen. It could bounce, it could break. Nobody freaking knows. It's whatever. So it could go up. That's one likelihood, and it could go down. And unless you have experience trading, it's like a 50-50 probability of either outcome occurring. It's either going to go up or it's going to go down. No mental gymnastics, no bullshit, no playing around. It's just probably going to go up or it's probably going to go down, and it is unlikely it will go sideways at the same price forever, right? So it's going to go up or down. So you might as well just say there's a 50% chance it'll go up, 50% chance it'll go down. Again, unless you get more experience over the course of a few years, then you'll have discretion, price action discernment, intuition that can kind of help you predict what will happen a little more than half the time, but you're still not going to be right like 90% of the time. And if you are, show me. Call some trades live for like a couple months and let's see what your win rate actually is. It's probably going to be somewhere around 50, if not a little bit lower, a little bit higher. But again, win rate's not important to even focus on. It's a fool's errand to focus on win rate. What's more important is just structuring risk and making sure you win more when you're right versus what you lose when you're wrong. So I'm going to check the 1 hour chart for this. I'm going to go here to the 1 minute. This could still push up a little bit higher, but I still think this is a good place to enter right now because the risk structure is good. So here's what the risk structure is. We're at a daily zone, so we're using that context. We're also saying prices come up here. It's sold off a little bit here. We tried to push up higher. It sold off. We tried to push up higher. It sold off. Now we're pushing up again, and it looks like it's struggling a little bit right here. Could price go up radically higher? Yes, it could. However, at this point in time, I think that this presents a very good place to control risk. I think it presents a very good trading opportunity. And the next extreme high right here on the 1 hour is going to be a little bit further up. So I'll set an alert there. That way, in case one of these stops out, I'll have an alert up there to be able to enter as price goes up. So let's see what the total risk on this would be in terms of pips. If the stop's just above, it'll be 8 pips. If it's up here, it'll be 40 pips. So let me plan it out with the little trading view position tool thing, and we'll see what the risk structure would be, what the risk reward would be. So if I enter here, then my stop's all the way above the support resistance zone. About 40 pips. If it does come, even if it comes all the way back to these lows, that's a 1 to 5. If it comes down here, that's a 1 to 8 risk reward ratio. And on the daily, keep in mind, price has been doing this like no problem. Within like, in this case, it would have been about 2 weeks that would have played out. In previous cases, it would have been like a couple days. Like this was just like 1 week of price data, like 5 candles, 350 pips in one direction. So what I'm going to do to structure the risk even more is I'm not going to use the daily time frame to place the stop loss. You can use like the lower time frames, like the 1 hour or the 1 minute. I'm going to structure this based off the 1 minute. So what I'll do right now is I'll enter a sell right here, and I will put my stop loss just above these little recent highs that it's made. Now, what's probably going to happen is it's probably just going to push up and stop out, and that's okay. But if I'm right, look how much freaking profit this is. If this is a 1% risk, I will make 20 units of profit. That's a 20% gain. Even after fees and commissions, that's like a 19% gain. Probably actually more. It's probably like 19.5% because the commissions are almost going to be nothing. So what I will do right now, let me see. Let me just make sure I'm structuring this because you guys are literally watching me place a live trade. Yeah, so I'll enter now. It's probably going to break the high. It's probably going to go up. You know, if that happens, whatever. I'll get the alert when it comes up here to this previous high on the most extreme high of this daily resistance zone. So I have a plan of what to do if it loses. I'm going to have a stop loss in place, and then I'm going to take the trade. So what I will do right now is I will enter the trade. This is my forex.com terminal. I call all my trades in the Nix Trades group. If you want to be in the Nix Trades group, it's just a group where I call all my trades. I'll drag the stop out to there. It's $130. Now, how much money is in the account? About 26,000. So I need to be risking about $260. So we'll do another like 80,000 quantity here, and I think that would be about 100 and 200. Yeah, so. All right, so $260. So now the risk is 1%. Now what I will do is I'll delete this long short tool because we don't really need it. I mean, it's cool to kind of see the ideology behind it. So the take profit, I'm not even going to put it all the way down there at the recent extreme low here in the daily. I'm just going to put it right there at the previous lows, because if this barely goes there, that's almost 10 times the profit on this, right? This means quite literally you could lose 9 trades in a row, and then with fees and commissions, because this is only like 2 standard lots, right? The fees on this might be like $20, $25, maybe $30 tops on this. So it's not going to be that big of a deal. So if it goes down here, that's a 1 to 10, even after fees and commissions. This tiny little move, which on the daily chart is barely a tick, right? It's like just over 100 pips. So it's 200 pips, which on the daily chart's nothing. If that little tiny move happens, then I make a shit ton of money, and everything was structured, and support resistance was used as a way to structure the risk, not as a way to try to predict it. If I'm wrong, I lose small, but if I'm right, I win big. So go here into my Discord. Again, this is the Nix Trades group. It's only $250 a month. You can ask me questions here in the group chat. I'll help you with whatever you need. People are always asking me questions. People are sharing their analysis with me. And then what I do here in this server, it's a Nix Trades thing where I call all my trades. So I'll send the analysis, and then I'll say, I'm short on Euro JPY. Then what my clients can do is they can go in here, they can click on this right here. They can see my exact entry on my live terminal. They can see where my stop loss is. They can see the position size, 200,000 quantity is 2 standard lots. They can see the exact risk for the trade, right, which is 1%, in this case, $260. And they can see where their profit target is, and they can see the analysis because it's a TradingView image. It's like a win-win-win. People have loved it since I started calling out the trades this way using the TradingView platform with my forex.com connected. So that's the way I call the trades in the Nix Trades group. You should join it because it's like practically free for all the help you get and being able to see all my trades live and be able to ask me questions unlimited. I'll literally help you with as much as you need. And then I also do a couple live sessions every single week during the weekdays, during the trading sessions. So you can get on Zoom with me and ask me questions and stuff on like a live group Q&A, live trading session, whatever you want to call it. But this is the Nix Trades group. There's a link in the description for the Nix Trades product. You can go to my website, you can buy it, you can subscribe to it, you can cancel anytime if you want. But it's just kind of a group where it has a trading chat where you can ask me questions, you can share your analysis, you can make memes about me if you want. We've got Darren, he made a meme about me, corn dog, coyote, cowboy, Nick. People share their analysis, people share this and that. This was Mark. This is the guy I told you about. He said, thanks, mate. I chickened out when this happened. So like whenever it came back up, he ended up closing at, I don't know, like a profit or a break even or whatever. So he said it was a very nice trade. So I ended up going to profit. I ended up sending him a 2-minute long audio message about emotions and shit. And he said, thanks very much. I won't let my psychology affect my trading anymore. These are the lessons why we are here. And then we just talked more about that. We talked about continuing trade. But it's just a group where it provides a lot of value where you can personally interact with me. Again, I'm a person who has almost a decade of trading experience and made millions of dollars in all the different markets combined. And you get a group chat where for only $250 a month, you can get complete personal mentorship from me. It's like a win-win-win. And like I said, it's practically almost free for being able to follow my live trades, my exact trades, every single one, every single day, and being able to ask me as many questions as you want to help you with things. Whatever it is, whether it's a broker issue or whether it's a trade thing or your emotions or psychology, or sometimes it's like a personal life thing you're going through, it's affecting your psychology. I'll help you in any way I can. You can join the Nix Trades group there's a link in the description that'll take you to the Nix Traders product on my website. I think it's missionfxtrading.com/NixTrades. I think that's it, but there'll be a link in the description for the exact one. And if you're not in the free Telegram channel, you need to join that right now. I post all my analysis in there. I won't post the exact trades and the entry until after the fact because I got to save something for my paying clients, obviously. But I post the exact trades and the entries in the Discord group. That's the paid group. In the Telegram channel, I'll share the analysis and I'll share, hey guys, I'm looking to potentially sell Euro JPY here. And then you'll have to be responsible for figuring out the entry and doing all the stuff, right? You have to give 2% of a shit to try it yourself unless you're in the Nix Trades group.
then I guess you still have to give a little bit of a shit, but just not as much of a shit as you would otherwise give in the free Telegram channel, having to do a little bit more work yourself. In the next trades group, you just get to see it all live and ask me as many questions as you want. If you're interested in those products, or not those products, if you're interested in that product, go and buy it below. It's real. I mean, maybe I'm crazy for charging $250 a month, but for how much you get, it is practically free. I have a separate product where I charge thousands of dollars for one-on-one personal mentorship just for 1 month. That's thousands of dollars for just 1 month of mentorship with me. That product, as long as you do it in the group environment in the next trades group, it's $250 a month. It's like a win-win. So in that case, I'll see you in my free Telegram channel, and I'll see you in the next video. Hope this video was useful. If it was, I'm not even going to ask you to like or comment. You do whatever the hell you want. I'll see you in the next video. Bye.